Done, ma'am.
Good afternoon, everyone, and welcome to RACL Geartech Limited Quarter 3rd Investor Con Call. I am Chaniksha and I shall be the moderator for this call. All the participants may please be informed that this conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, you may post your concern queries, if any, in the question answer box available, or they may raise their hands as available in the right hand corner of the screen if you want to speak during the proceedings. Please note that this conference is being recorded. We have today with us management of RACL Geartech Limited, represented by Mr. Gursharan Singh, Chairman and Managing Director, Mr. Devraj Arya, Director and CFO, and Mr. Prabh Meher Singh, Vice President, Finance and Business Excellence. I now invite Mr. Gursharan Singh for his opening remarks. Sir.
Hello friends, good afternoon. So it's really nice meeting to all of you on a virtual way, and I really look forward for interacting with you. And I must say that our interactions with investors really keep us fully informed about the market dynamics. And it definitely, if somebody keeps asking questions, so one has to always remain prepared. So it really keeps us on toes. So really, it's a good way to interact with you, and definitely we'll answer your queries and your questions in a systemic way. And as usual, I will first request Prabh, he will share with you a brief presentation on what we are doing and what we are presently and from where we started. So it is a brief synopsis of RACL's background and our future roadmap. So then subsequently we can take on questions which many of you friends have already sent us some queries. So we'll definitely try to cover as much as possible. Yes, over to you, Prabh.
Good afternoon, everyone. I hope I'm audible and clear. Today we will be covering the quarter 3 numbers in terms of the quarter which ended 31st December 2022. Other than that, in today's presentation, since there were a lot of suggestions and questions regarding to the company, how we operate, there are many people wanting to understand other than the financial side, kind of an informative session, if we can make people understand the complexities of running this business, wherein you have high variety, complexities of running a high export oriented business, what challenges are there. And then also there are certain questions or inquisitiveness regards to the product. What exactly is a gear, or maybe as the name suggests, RACL Geartech. So what are we doing in terms of the manufacturing, or are we doing just gears, or what are the actual products? So maybe we thought of putting some more information about the company. So this time maybe you will have less updates about the future projections or numbers, but this session or today's call is more on providing what the company is, maybe on the past, the present, and how we are running operations. We've tried to cover not everything, but most of the things wherever we feel might be good for you to know. So I will start my presentation with this overall picture of the plant. So this is our Gajraula plant, which is on your screens right now. So this plant, as you can see, is spread across 26 acres of land. This is the vacant land, what we have. Give me 1 second.
Under this road.
Yeah. So this entire plot is available. So this area is what is vacant right now. This area is the plant what we built in 2021, what we call OJUS, and this is the new plant what we will tell you about, what started in November this year. So this has been added here. So in total, though this is one plant, but we have 4 plants within. So this is the legacy plant. We call it Chetak. This is something which covers or produces parts for having, let's say, domestic applications or parts where quality norms are DIN 9 in terms of the grading of how we terminalize in gear parameters. So these are, let's say, 3-wheeler parts, trucks parts, or other industrial parts where precision or focus on cleanliness and other aspects is not too important. So this is a plant which is there since 83. This was the legacy building. This plant, what we call is Tejas. This plant started in 2011, and this covers many of our export customers, primarily 2-wheeler business. So we do a lot of assemblies here. We do a lot of loose components here. This is our finished goods store. This was made in 2018. This is our forging plant. Forging is an input for a lot of raw material for us. So we buy steel, do the forging in-house. So around 50% of forging is done by us. Inside, rest is to our approved suppliers. This started in 2014. And this is what OJOS I just explained you. This is our main stores, canteen, other support function area. And here we have the entire plant. This is some residential complex for our employees, key employees. Around 80 families live inside. We are working on renovating them as well. So over this is our plant, how it looks like. So this is our main mother plant, Gajraula. 95% of revenue comes from here, and then other plant, Noida. I don't have pictures right now, but maybe in the next presentation we try to cover that. Okay, so I go to the overview slide. So this is something which, in any case, we have covered in past also. So I will just run it. We are an Indian company based out of Noida. We are since 87, and we do primarily transmission gears and shafts, sub-assemblies, machine parts, chassis parts, industrial gears. All our plants are ISO certified for occupation health and safety, for ISO 9000, for environment, which is ISO 14000. And we have 2 manufacturing locations, 1 office and 3 warehouses in Europe. So this is something which is known to you all. Some recent recognitions. So we are proud to share that we were certified by the Great Places to Work in 2023 March. So overall, our satisfactory index, what we received was 91%, which was pretty high in terms of what the average peers do. And this is quite a good feedback for us in terms of how the people are satisfied, motivated, and eventually that is the biggest asset we have. So we consider our employees as the biggest asset, and we work very diligently on making the workplace more satisfactory. We were also recognized as one of the India's best brands by Economic Times. So this was again a prestigious recognition which came in December 2022. And this was felicitated to us in Mumbai. And this is again talking about in the automotive space, how we are trying to establish ourselves as a brand towards serving to premium luxury niche sector. It will change.
Exit the PPT mode.
No, it was changing earlier also. Sonalji, can you see my screen changing?
अभी तो कुछ नहीं है सर.
Okay, some error at my end. I will share my screen again.
Exit कर दो, देख लो. It's not showing.
Yes sir.
Yeah, thanks.
साइड पीछे चलेगा और पीछे चलना
Sorry. Yeah. So this was covered. So now we go to the financial slide. So in terms of sales, so we did the highest sales ever quarterly. We did 100 crores. So we touched that milestone figure, what we were all working towards, at least for this quarter. And the year-on growth was around 33% if you compare same quarter last year. And quarter-on-quarter was around 11%. So it was a good quarter for us in terms of revenue. In terms of profitability, the operating profit was 62% higher than last year to 26.56 CR. And the profit before tax was also higher by 80% year-on-year to 16.12 crores. And quarter-on-quarter again better by 20%. The margins were good. The operating margins were as high as 26.5% and net profit margin around 12% to the balance sheet. It was the highest quarterly sale and strong demand from existing customers remains, and our utilizations are running at good, healthy 70% levels. So on the number slide, since these numbers are already available with you, so we won't spend much time. In any case, if there are any questions, you can answer. You can ask in the chat window. Now we talk about certain highlights and information about the organization in general. So we wanted to today take you to the memory lane. So basically, some of you or might of you have started understanding us or following us maybe a few years back only. But the company has a history, so we wanted to run through it in terms of how the company has transformed over the years. So we started in '89 as Ronak Automotive Components Limited. And this company from 90 to 98, let's say around, was serving to many of the Indian OEMs which were set up at that time, including Escorts. Yamaha had a joint venture. They were making motorcycles. We had Escort tractors in 93. Maybe you can run the journey because you are more closely involved. So Mr. Singh can answer.
I will really. This was the period when actually late 90s was, because we started production in early 90s. So first 10 years, of course, in those days, aftermarket business was the predominant business in Indian market. There were not much OEMs, but the aftermarket business was really very, very flourishing in those days. And, in those days, road conditions were bad and motor vehicle axles also not so stringently followed, so overloading. There was a lot of demand for gears, breakage and all. So eventually, this company was predominantly doing aftermarket business. But yes, we had always focus on developing OEM business also. So in 90s, Scott Yamaha just was a joint venture. We started ramping up, so we started producing parts for them as Scott tractors also. And Piaggio, in fact, acquired this three-wheeler business from an Indian company called Greaves. So we were doing something for Greaves, but Greaves was not able to sell. But when Piaggio acquired, so this Greaves business, and the very first three-wheeler which Piaggio rolled out in India, that was all gears from our company. So, and eventually, although those were kind of run-of-the-mill gears with inline quality and not so precise, but yes, this was the predominant business. Then in 2002, as you all are aware, we really started this business restructuring where this company went to sickness and then management change, and yes, of course, then I was the core person given charge by Honorable BFR to restructure the company. So as part of business restructuring, then we really decided, because on one side we were doing financial restructuring or the management restructuring, But in parallel, we were doing business restructuring also, because eventually, if we have to really restructure the company, or restructure the management, or restructure the finance, but important part is business, from where the money has to come. So in year 2002, we decided a strategy. Look, we should actually reduce our exposure to aftermarket in a limited way and grow into exports business. So this strategy was decided in 2002, and eventually, 2004 was the first export order we got, and I'm really proud to share that on one side we got this first export order from a company, Kubota Tractors Japan. But I'm proud to say that we were the first Indian company who could ever got successful in exporting gears back to Japan, because Japan was always been considered as exporter of components. So we were the first company. For us, it was the first business opportunity, but yes, we really did it a success. And the first order we got as a direct export order from Japan in 2004. Then eventually in 2005, we got a first export order, but as a tier 2, not as a tier 1. We were supplying gears to an Indian company who was actually assembling that gearbox, and those gears we were producing, and eventually that gearbox was being supplied. So this was the order which we got in 2005. So that was the first, I'll say, our indirect European connect. Then subsequently, these two businesses led us to many new things. Vespa wanted to come in India. So, of course, it is a Piaggio company, but Vespa started producing vehicles in 2008, 2009. So, we actually got this business for Vespa scooters in India, and now I'm proud to say that we are single source supplier for Vespa from day one. As of today, whatever Vespas are being produced in India, our company is or your company is the single source supplier for that. Okay, and we also achieved a landmark of $10 million turnover in 2008. Then there was the next real milestone. We got a direct export order from Europe, because as I told you, 2004 was the first Japanese export order. 2005 was actually a indirect export order because we are working as a tier 2. But year 2009, we got first export order from BMW, because BMW acquired Husqvarna motorcycles. Husqvarna motorcycles was a off-road motorcycle manufacturing company in Italy, which BMW acquired. And since it was a low volume business, BMW, we were lucky enough, or we were really, our strategy worked. So we got the first order, a direct export order of BMW Husqvarna in 2009. Can I just go to the next slide? Yeah. So then, then the rest is eventually now things started moving. Then, 2009 we started BMW Husqvarna. Then eventually BMW, we got a major export order from BMW Germany plant, because they were quite happy with our performance with that low volume business. Then eventually they gave us a high volume business from the Berlin plant. And almost in the same year, we got first contract from KTM Austria. Then eventually, if we are supplying to Kubota Tractors Japan or BMW Germany, so obviously KTM also got attracted in starting relationship with us. So this was the next historical event which started. And then eventually we decided to really, yeah. So then we really, when we started this business, whether it was KTM or BMW or Husqvarna, they were predominantly not very high volume business. And they were niche market, and of course premium segment or niche market. And India was a big producer of motorcycles in those years. So if BMW was producing, say, 50, 60,000 or 70,000 motorcycles in 1 year. Hero MotoCorp was producing probably 100,000 motorcycles in 1 month. And whole of India was producing maybe 10 lakh motorcycles per month. So eventually we were facing a lot of supply chain issues. We were not able to get forging at the real pricing at value for money cost, and then eventually it really started hurting our deliveries of supply chain issues. Then we decided, okay, let's do some backward integration. So we decided, okay, we decided that again, we always work with a strategy. So we decided that we should invest money on backward integration. So we invested about $4-5 million in forging plant. Then in parallel, we decided that we should do little forward integration also to invest on new technologies. Typically in India in those days, people were knowing gear hobbing or gear shaving, that's it. Nobody was knowing gear honing or gear grinding. Of course, there were some companies doing it, but predominantly the OEMs themselves. Tier manufacturers like the gear manufacturers were not really doing gear honing and gear grinding. We always thought ahead of time, we thought we should invest money on gear honing as a technology. So eventually we upgraded our technology that from DIN 8, DIN 9 parts, we started backward integration and forward integration in terms of technology. So eventually this created some kind of plateau in our performance. Of course, in those days, then the growth was not really happening, but profitability was still being maintained or rather improved, because when we did the backward integration, we were able to have a good improvement on margins. And when we started gear honing technology, so with gear honing technologies, our value addition increased. So this is how we were able to grow profitability. And 2014 was a breakthrough year where we really again did a kind of forward integration. Then instead of supplying only the loose components, now it's got a first contract from KTM for supplying of assembled gears and shafts. In motorcycles, we call them gearboxes, because in actually motorcycle, typically there is no separate gearbox. The gears are put just below the engine housing, but they are all assembled with all the bearings and circulates and all sort of stuff. And those two shafts with all the gears are put into the straightway engine housing. So KTM gave us a first order for their top of the line Duke, the 690, the Duke 690. So that was the first contract we got in 2014. And then, of course, 2015, we really worked just making next steps, changing our companies to name from a generic name of Roanoke Automotive Components to a short and swift name, but connecting with our gear technology, change the name to RACL Geartech Limited. So our focus was now, since we have developed a good market placement, market position, so it was just a kind of branding exercise. And eventually today, those thoughts and actions are really taking shape. And in 2017, we really broke the benchmark of crossing 50% of our revenues coming from the exports business. And this was a period around when we put curtains to our aftermarket business. 2015 or probably 2016 was the last year when there was a zero aftermarket business. And then we were doing only exports and domestic OEMs. And then, of course, in 2017, we crossed the 50% revenue of our business to OEM exports. 2019 again was a landmark year where now we are a truly multinational company. Until 2019, we were just an Indian company and selling product outside. But in 2019, we established a 100% Indian subsidiary in Austria. So that way now we are a truly multinational company having presence in India as well in Austria. So 2019 was a landmark year. And 2021, thanks to our major customer ZF, we made foray into passenger vehicles, passenger cars. Although in between, I forgot to add one thing. The first electric car was Reva, and then which eventually was taken over by Mahindra as a O2. That first electric car was always being with our gears. Until Reva or Mahindra Reva was running that company, that E2O was the car name. That car was being actually produced by our, so that way our connect with e-mobility also is there from very, I'll say incubancy stage. Eventually after that, Mahindra, when they grew forward, so Mahindra was of course making it with themselves, they stopped purchasing from us. But when this Reva was there, we were actually working for them. So this is a kind of brief journey of past 30 years. And Prabh said rightly that in this journey, most of them he was just as a kid, and then he is now really taken it forward. So now I hand over to Prabh again for taking it forward further. Yes, Prabh, over to you.
Yeah, thank you. So we have tried to cover only the key milestones. Of course, we've added many more customers during these 30 years, but these are the ones which were game changer. These are the ones which helped us bagging more customers because of bigger brands, because of bigger complexities, what they offered. And overall, we've tried to cover. The idea behind this is to make you understand how the journey is. And there was always a lull phase between the companies, 30 years, but the growth is coming only in last 10 15 years. So maybe some of you know the background, some of you didn't. So we wanted to just spread across that journey so that you're able to understand the company more closely. Now we go to the next slide, which is about, yeah. So there is one more, okay, my presentation is stuck.
Again, stuck. So it's not moving. Overloading.
Yeah.
Kanishka, it is visible to you?
Was that yes or no?
Now it is not visible.
Okay, okay.
All that IT guy. Slow.
Sonali, can you tell what's the reason why it's stopping?
Maybe there is some network issue from your side, I think.
Maybe you disconnect me correctly.
Not really. Give me one second.
Rest other thing is okay, but there is some.
PPT mode से exit करते हैं. PPT heavy है या मुझे डिस्कनेक्ट करना है. पर मेरा वाईफाई है लैब पे.
I will join back. Yeah, sorry for this. Sonalji, can you give me the share screen settings?
Yes, sir. Just a second. Just a second.
Sorry, Adnan, there is some network issue. We are not able to run the presentation. Give us just a couple of minutes. We are reloading the entire presentation.
Sonalji, can you allow Gushan Singh ID to share the screen?
Okay, sir. Okay. Gurcharan sir, now you can share your screen.
Yeah, I hope you can see now.
Yes, sir.
Okay. So yes,
Sorry for this confusion.
for this confusion. Yeah, Sonali, can you confirm? Can you see the screen and hear me fine?
Yes, sir.
Okay, good. Thank you. For we wasted maybe 6 minutes. I'll try to cover faster. Okay, so we wanted to also cover a certain part. So you all know maybe what we make and what we not because we have shown many of the pictures in the past. So today we wanted to cover that, a lot of you feel gear is something which goes, let's say, I assume that most of you would not be technical. If you are, then that is great. So, one second. Yeah. So it is gear. What doesn't mean that what you put in a car, maybe when you are doing, that's also a gear, but that's a transmission part, right? So the gear does not only mean that what you're seeing in a car or maybe in a bike, that is just usually the gear. But the gear has application in the engine, has the application in chassis, anything, even in your watch, there is a gear in medical equipments, in railways. It is something which requires any reduction or
Sir,
motion which
your
needs
voice is breaking.
My voice is breaking. Okay.
Yeah.
1 second.
Yes, now it should be clear.
Is it still breaking?
Yes, sir.
Should be okay. Sonal, can you hear us clearly?
Yes, sir. Everything is fine.
Yeah, okay.
Yeah. Sorry.
Yeah, even that one is also saying. Okay, sorry for that.
So we will just try to cover today basically that what exactly we do other than what goes into the gear. So, these are some parts which go into a chassis. So what you see a red flange, this is something which go to the wheel of the motorcycle on this. The brake disc is mounted. This is a safety component we are giving to one of our customer. On the left, what you see a footrest. We do even such kind of parts. This is a one new electric scooter for Indian two-wheeler manufacturer. We are giving this footrest, and this is again not just the gear, or this is not a mobility part. This is not a part which goes into the engine only. Maybe e-mobility comes in. So this is for e-mobility, but this can obviously go to an engine scooter as well. This steering tube you see, this is the central pivot on which the bike steering is mounted. This goes to one of our export customer. And see, there is no gear on this. There is a precision machining. This is an aluminum part. So there are many other complexities to this, but the point we're trying to maintain is that eventually this is not something which is just a gear.
I will just show you even this component. This is actually on which the brake disc is mounted. So again, it is a vehicle part. So it's a basically brake mounted disc.
Yeah.
Yes, next.
This is some new projects we have started. This is a steering shaft. This steering shaft is what we bagged right now as a new project. We have already informed you about this. This goes to Bosch as an end customer through one of our tier 1 ZF. This is a reverse steering mechanism. So now you're seeing many of the new cars will have a reverse steering mechanism. What that means is when you are typically rotating the steering, only the front wheels rotate. But now in the newer generation, because the electric cars are longer usually, and that means that you need to have a higher turning radius. So this is a new revolutionary product which has come in. So we are working with ZF on making these steering shafts. So basically, what this means is it helps you to have a better turning radius and better stability. Axle shafts, again, these are going to one of our customer in Europe. These are truck parts, and these parts are going basically as an axle shaft. Next.
And again, these components will go to the EV also because they are not related with the gears or the engine. These are actually related to the rear wheel drive.
Yeah. Balancer shafts. These are again going into the engine side of product. So basically, these are very complex. These are going to two-wheeler. They are going to four-wheelers. When I say four-wheeler, ATVs basically, all-terrain vehicles. So these are for petrol engines for sure. But these are again very complex, and they're going to remain because, as you know, most of our products are going to 690, 790, those higher engines, which right now are not prone to e-mobility. And secondly, these are something which are a part and parcel. So you see a gear obviously mounted there, but it is just not the gear. There is a lot of complexity in this forging or in this way how we make it, and then the complexity of the design. So this is to give an idea that what.
Just to add what Robert said, these balancer shafts are actually basically going into multi-cylinder engine motorcycles because typically like this balancer shaft is for a Duke 990 motorcycle for KTM, which is a two-cylinder engine. So in two-cylinder engine, balancing of the crankshaft, there is always a balancer shaft. So this balancer shaft is having very, very complex requirement. Not only the forging of the gears, even weight balancing, even the angle of weights. So these are the kind of complexities where our value additions are really very high, and we are doing very large number of balancer shafts like this particular is for Duke component. This is for a 1.5 liter engine, off-road vehicle applications, and they're all again for very complex requirements. Yes, over to you. Next one.
These are some starter motor torque limiters. So these are going, so basically when you are having immediate starting of a motor, so then there is an immediate thrust of energy. So these torque limiters help to act as a catalyst to get that starter motor running the engine. So these are again not into the transmission. These are not, let's say, on the chassis, but these are part and parcel to how an engine is being run. This again is we're doing for some huge volume for some good customers, and this again is something which even now these many application e-bikes are coming. So this can obviously be a party to that. Park lock wheels. If you're driving a automatic car, there is, or when you put the car in P, the car doesn't go anywhere. So basically, this park lock mechanism is engaged. So these are the parts which we are doing. This is some new parts, and this is for electric mobility. The parts on the right, on the left are for again end customer in Europe. Some electric car is being launched, so that is the part for that. On the right is for fuel car, but eventually if it is fuel or electric, these parts remain, and these are new product categories which we are entering, and these are also very precision oriented. This typically is a gear, but eventually this is not just a gear. That is what we're trying to do.
Actually, park lock wheels will be carryover parts even from a fuel car or a fuel truck to an electric car or electric truck. Because even in an electric car, you have to lock the motor when vehicle is in neutral mode or it is an incline or a hill. So this park lock wheel will be a carryover technology to the new generation e-mobility solutions also. And this is a very, very complex component. Eventually, it is a safety component. With brakes, eventually a vehicle doesn't stop. So this is a kind of safety where we have actually got very good business orders from many customers. Basically for ZF, but for many models.
E-mobility parts, so you see on the left is an output shaft for a scooter, rotor shaft. So this is mounted to the motor of a scooter, and it gives drive to the axle. And basically, this is a very
It is basically armature shaft of the motor.
But this is a very common part. Many people, we can cross-sell it, kind of a technology for the product. Wheel and axle assembly, what you see on the top bottom right, this is also a very complex assembly which we're doing. I have a video, I will show you how we make this part. So this is the aluminum housing which is critically machined. Then this drive shaft is the shaft is assembled into it, and on this, the what you call wheel of the scooter is mounted. So the back wheel, everything is resting on this, and the pulley is then mounted on this.
In fact, wheel will be mounted on these 5 bolts.
Yeah.
And here the belt will be there, and this actually is basically which goes into the vehicle.
And what you see in the above are for some, again, chassis parts, new technology, what you call electronic roll control. So these have application in stabilizing if the car is going through any kind of active roll balancing. And these are again for prestigious end customers, ZF which and they are selling to many OEMs. And this is how, the company is going into the mobility side. Now I talk about some assembly capabilities. So we don't do just the loose parts. We are very precision oriented in the assembly. This is our assembly line, what you can see from inside. Go next. There is a video which should run if you go out of the presentation, or maybe. It is running now.
So it's a fully automated line with all the safeties and mistake proofing and all the data logging for the various processes.
So basically what you're seeing right now is a wheel axle assembly of one of our customer for an e-scooter, and this is how we make it.
This station we were pressing the oil seal.
Yeah.
Bearings are being pressed. This axle shaft is being pressed. And the operator is packaging also the component there so that we save all the wastages.
Yeah. Okay, so now, so now what we have tried to show you is on the pictorial side, how the products look like, what we are making. There are a lot of questions which come on our way, that what is your, not a USP, but what is your niche? You say, okay, a lot of customers come to you basically because of many things. Why can't it be replicated? Why there is a high learning curve? So in the coming slides, we cover 4 aspects. 1, how much time is needed from a business RFQ or a request for quotation, which comes from a customer to the actual, if we have been given the business, to the actual sample submission and then the product generation. Why do we need a high lead time of equipments to be deployed, maybe 6 months, 1 year before the project starts? Then we talk about a typical process flow. How do we make a part? You will understand the processes which are involved. I will cover that. And in the end, I'll explain you how, when you are a 70% export company, it is so difficult to manage and control the customer assembly lines because they run as per their weekly schedules, and you can't make as per their weekly requirements in India because you need to have a lead time of 3 months, and then you have to send a pallet load. So why it is too complex running and managing a company having 800 different part numbers of different volumes, supplying globally everywhere. So we try to cover all of that in the coming slides. So this is basically a business acquisition and a development process. So it starts with the RFQ receipt. Let's assume that the customer sends us a request for quotation, that this is the drawing. Can you please let us know if you are make it, and if you can make it, what's the price? So it starts with the feasibility and study. We first send the initial feasibility and then the cost. After the cost, which is a preliminary cost, the technical discussion with the customer starts. From this RFQ to technical discussion, it typically takes 3 weeks. That is the time we need, maybe 15 to 20 days to prepare that quotation. After the technical discussion, which is generally 3 to 4 rounds, because the customer wants to understand each and small integrity of the part, how you make it, what will be your process, what are the other aspects. If all of that, let's assume, is perfect, because there are competition as well, we have to be competitive, then there are further cost negotiation rounds. My customer sits with me as cost validation. They have their own cost teams. They set us targets. So typically that takes 6 to 7 weeks, which is best case scenario. And you have to also understand we quote maybe 100 projects, only 1 or 2 reach this stage. So the success ratio is maybe less than 5% of one RFQ reaching the technical discussion stage, and from technical discussion to order finalization, maybe 3%. Now let's assume the order is finalized. We have been nominating in 10 weeks. After that, we then design the process, how that process will look like, the control plans. There is a humongous documentation which goes ahead. Now the customer gives me a timeline that, okay, if today it is March, I need the samples in July, let's say this October. So then I have to finalize the CapEx. I have to see whether I have the capacity or I need to deploy it. Let's assume I need to deploy it because of the volumes. So then we release our capital purchase orders to our machine suppliers, keeping in mind there is a lead time, typically 7 to 8 months for any high equipment to come in. After that, we've already cost maybe 10 weeks. Now we do the raw material, because if there is any steel supplier or any input we have to buy, we do finalizing with them. We do the cost estimation at the initial stage, but then now at the awarding stage, we sit with them on the processes and aligning as per the customer timelines. Then we call APQP documentation, which is the gateway wherein the customer is saying, okay, from now the sample submission will start. Typically, the customer takes 3 rounds of samples, which is B, C, D, and then the PPAP. B is, let's say, near about the specification they want. C is off tool, off capability, in the sense it has to be exactly made on the same machine and the same tooling which you will do the serial production. Even if they're taking only 10 parts, I have to deploy the entire capacity to run these samples, because otherwise they don't accept the samples from any other shared capacity if we have committed for a dedicated capacity. So I've submitted the samples, then the measurement correlation happens, because what I check here doesn't mean the same thing will be checked there, because we are talking about microns, 1 micron, 2 micron. Maybe there is dust on the part and the part is not okay. So that measurement correlation typically take two weeks. Then everything is done. Then we do PPAP. After that, there is a validation process which the customer does from these B samples to the PPAP, because they are doing their line testing and whatever, which is around 3 months. Then we do the documentation and approval process, and then let's say the serial production starts. So all in all, if I received RFQ today, till the business being starting, I need maybe a year to do that. And we have been telling you this, how it happened, but today we try to pictorially present in a process flow chart, so it is clear to you why do we have a long gestation period between the project being awarded to the project being starting. So this is a cycle, how it looks like. Yeah. Now I will run through, this is something which is too deep, but I will just try to explain you. Typically, if I have to make a part, I've taken a part which has a higher process. So these are the operations which usually go into it. So I procure the steel, then I'm doing forging. If it is outsourced, I outsource it. Then the forging has to be normalized as per the hardness requirements. I will not bore you with the jargons, but short blasting is for cleaning the surface, which is because of the part being heated at a high temperature. Then we do some rough turn, let's say, machining processes. Then let's say these are usually outsourced for us. We have a supplier base. These are non-value additive processes, and we don't spend much time and effort in this. So we have a supplier base who does for us. And then if you go next, wait, it is loading. Yeah. So let's say these are the, it's working fine. These are the processes, let's say we are doing in-house. So now for a part from a steel to fully finished, this is a typical gear. So first I have to hop the part on a certain machine, then I have to remove the burrs. Burr, what we call is the excess material which is on the tip of the part. Then let's say if there are any machining holes, or if there are any other weight removal activities which we do on the part is done through, let's say, a vertical milling machine. Then we do send it for heat treatment. Heat treatment is when we have to attain the hardness. There is a furnace where we are heating the part at, let's say, 900, 1000 degrees. Then after that, we're doing tempering to normalize the part. Then there are other processes which are attached to the heat treatment process. For example, yeah, so then basically you have all these processes which are aligned to it. So what we're trying to explain is that typically when you say that, oh, there are a lot of capacities being deployed, a lot of capex being happening, because you have so many processes to make a finished part. And then all of these processes have capacities. Somewhere I might have everything, but I might not have washing machine. I have to install that washing machine because my customer says, how will you wash my part? Maybe I have some common capacity like heat treatment. I have furnaces where I can put commonized parts, but let's say this part has a higher weight. So my loading is not okay. So I maybe have to find a supplier. Hobbying, I say, okay, I have 20 machines already operating, but this part, let's say, is bigger. I don't have that tooling. So maybe I buy a machine. So every level we have to add capacities, and that is why our business is highly capital intensive, because each process needs to have its own capacity. And without any capacity, you cannot produce a fully finished part. So this is how typical process flow of the part looks like. We go next. This was in terms of the part. Now let's say I am running that part. Now I talk about the criticality of export business. So what you see in the top is, let's say I have 8 customers. 8 customers send their sales plan as per their own schedule. So the customer doesn't want my problems to be his problem. He tells me I need the part in the month of May, and he sends me a schedule in April that this is my this month's schedule. Now I can't start making in that month because I also have lead time. So what usually how we plan our operations is, there is a sale plan which we release every beginning of the month. We release a sale plan tentative on the 18th. Then on the 1st, we release the sales plan, which is confirmed, which we release to our plant. In that, there is a forecasting of 3 months, which talks about what my customer might be wanting in other coming areas. I will show you the sale plan, how it looks like, but maybe it has around, don't do it like this. It's good. So we have around 800 types of parts. So each customer part wants to be different. So my sales team then plans that how much inventory is in my warehouses in Europe. I'm talking about exports business. Then after that, what needs to be bought from the plant. So my sales team is like buyer for my plant. Then we send the sales plan to the plant. Plant checks what is available in the store, what needs to be ordered, and what is in the WIP. Then the RM team sends this schedule to the steel suppliers, job workers. And now the steel, if I have to make a part today, steel has to be casted 2 months ago or maybe 50 days ago. So for that, we need to have a forecasting mechanism which involves that what my marketing is asking today, steel should always be in pipeline. So I have to keep some inventory there at the supplier end. Then I have to plan my inventory at the job work level. And typically, this is how the cycle is when we are Go back. And then let's say the procurement has been planned, then it goes to the in-house plant and the process happens, and then I am delivering the goods. There is a 2-month C time, and then it goes to the warehouse. Typically, what the customer asks is already picked from my warehouse because I supply from there, but then I have to refill my warehouses or I have to refill my customer lines. Some of the customers have FOB requirements wherein they pick up from my gate, but they don't pick up for the same month, they pick up for a schedule of 3 months later. This is how the complexity is of planning these sales. Maybe if we can show the sales plan, it's okay. Maybe we can show it later. That's okay. Okay, go next. Okay, so this was about the learning, how the company is. We've already taken a lot of time. This is, I think, a lot of you asked what is happening with the 470 crore figure, what we gave. So we've tried to give you a number that this is how this year should close like. This is budgeted around 365, and next year 470. This is how the revenue will come from, and this is the confirmed business order we have, and this is the customer advancements and some peaks which were highly not anticipated earlier have now come. So this is basically that.
Here I will try to highlight over here. You see our strategy, how it is working. You know, 3-wheeler business is a dying market, and we always say that we always think ahead of time. So we planned maybe 3 years back, yes, 3-wheeler business is going, and this will really see that how 3-wheeler business year on year is going down. Last year it was 7%, this year is 6%. Next year budgeted only 4%. And who is picking this business? Passenger cars. Here it was nil, now it is 9%. Who is picking here? Electric scooters. Here it was 2%, now it is 4%. Heavy vehicles, it was 2% or 8%. So this is how the dying business, we are really taking care that there should be no shocks or setbacks at a later stage. Same way, our fuel vehicles, fuel 2-wheelers, since we had a very, very high dependence on 2-wheelers, fuel 2-wheelers. So gradually it is coming down from 49% to 43%. So this is always we work with a long-term strategy. It really works. So this is a kind of futuristic thought process.
Yeah. So,
Next.
yeah.
Oh, yes.
Some updates. So this, we told you we were building the plant in November. Now the shape has taken up. This is the recent pictures of the plant. So we have called it Shakti plant. So all our plants are now as per Sanskrit language, maybe. So Chetak, Tejas, Ojas, Shakti. So these are the 5 plants we have inside. And these plants are catering, as I told you, to different segments. So this new plant we have kept in anticipating the new volumes. Now, some of you might have questioned that this 470 crore will something be generated from this plant. On the 470 crore value, yes. Right now, we are sharing much of the capacity from the Ojas plant. Since some new projects are coming there, a customer insists that you vacate that and keep it for us. So we are shifting some capacities to this plant. But out of 470, the immediate ramp up from this plant will not be that high, because typically if this plant would have also been there, we would have still achieved this revenue what we have. But this is in anticipation of the future projects which we are having. The volumes or the revenue increase from this plant will be more applicable in the years after 24, which is our next roadmap towards reaching a higher target, more than 500. This is a recent picture. So this is the Ojas, what you see in front. This is one new development. We've also put in solar rooftop.
Yeah, so no, this is
so this
is our Ojas.
Yeah, so this plant is, let's say, a green plant concept. We are working on that. And the shed which you see after that, the white, is an extension of that. So in total, this plant is around maybe 60,000 square feet. And
this white building is Shakti. This is Ojas. So, and this Ojas is already now generating solar power also. So technically, what in daytime it is almost 15% of our power requirement is fed directly. But overall, in 24 hours period, about 5 to 6%.
And on the left, what you say is our barren land, which is available. We usually use it for agricultural output. And maybe in the early years, this was the good source of our operating profitability.
Yeah, even now, if you see what this all is, wheat. So we don't produce only gears, we produce wheat also.
So, yeah, we can go next.
Yeah.
On sustainability, this is also a very important aspect for us. We are a climate conscious organization. We are working towards monitoring our CO2 emissions. Maybe next year we will also start giving CO2 numbers to the investors and the shareholders. So as of now, our plans is, and already 5% of our total electricity is now through green energy, through rooftop solar. And our plan is to raise it to 50% in next 5 years, maybe 3 years. We are wanting to do some agreements with the state government of green electricity, and there are other ideas. We have already invested in water treatment plant. This you might know through our annual reports that we built in a CETP. We are treating not only the effluent, but also the sewage, and our water, which is being treated, is not wasted into the soil or gardening. We are using it for our installations like chillers and other things, for urinals. So we are saving around 50,000 liters of water every day because of this. Otherwise, which we would have been just, let's say, wasting. This is now in plan action for 2 years now. And we also, as per CSR activities, we're running a small school of around 200 children. Now, obviously, our profitability is increasing. So is our commitment to environment. So we will be increasing, and we have a target to increase to 1,000 students in the next 2 years to make sure that we are providing back to the society, which is giving us this resources. Good. So this was a very extensive but crisp presentation which we wanted to provide. And now maybe you can stop sharing your screen and we can go to questions. I know there will be a lot of questions. I'll start.
Yes.
So what we will do is we do have a set of questions. So I will tell the question and we will then answer also. So maybe we can start.
Maybe right way will be Taniksha, if we can.
So I will run it. That's okay. So we can start with Mr. Rudresh Kalyani. Sonalji, if you can unmute him. if he's there on the call.
Ms. Sonal?
Rudresh there?
Yeah, can you unmute Mr. Rudresh Kalyani?
If he's on the call.
Yeah, he is mute.
Yeah, if you can unmute, please.
Yeah, Mr. Kalyani, can you hear us? Have you unmuted him, Sonal?
Yes, sir.
So, Mr. Kalyani, can you hear us?
Maybe he's still digesting the presentation.
Yeah.
Maybe we can.
Maybe then we can call Mr. Ankush Agarwal.
Yeah, am I audible?
Yes, yes, Ankush. Welcome.
Yeah. Thank you for taking my question, sir. So, firstly, in your results, you have announced that you are looking to invest about 250 crores over the next 4 years, and you have also pulled your guidance of rupees 500 crores in FY25 to about 470 crores in FY24. So, I just wanted to understand what is giving you this confidence for this large capex and this kind of revenues. Have there been some major positive development on the business development side, if you can share?
Yes, Mr. Ankush, I'll tell you, end of the day, it is a customer who strategizes his business plans, and then eventually we have to take the messages from there and we have to really take it forward. It is a known thing. ZF actually has drawn out a very, very ambitious plan to source their components from India. Right now, ZF is sourcing products worth about $300 million from India. Their target is by 2030, they have to do $1 billion of 3 billion from India. So $3 billion in next 7 to 8 years. And we were the first company in India who could do with the ZF for purchasing fully finished components for European applications for passenger cars. So, and our relationship, which started only 3 years back, that too in COVID time, but our deliverance in terms of timely deliveries of the samples or the mass production or the capacity build-up or the quality performance was so good that there is a huge flood of RFQs and new business opportunities with us. As Prabhu has already explained to you in his presentations, just in 3 years we have started so many business lines. So we are really very confident to explore or to wrap up this particular customer in a big way. And all our existing customers, whether it's BMW, whether it's Kubota, whether it is all our existing customers are having very, very ambitious plans. And we are working with our customers generally for more than 5 years, 10 years, 15 years. So which shows a very, very sustainable business. So we have this forecast with us, and based upon this, we have really drawn up our expenditure plan. We are quite optimistic. You have already seen that next year's forecast we have already shared with all the shareholders, so that which is about 25 to 30%. And based upon these assumptions, when we are, as Prabhu already explained you, we are a capital intensive company. If we have to add every year, say 50 to 100 crores, because if I have to maintain 25 crores of 25% of growth, I have to add 100 crores of revenue. So obviously I have to add 40, 50 crores of capex also. This is how we have really planned it out. So definitely this, government of Uttar Pradesh announced certain schemes for mega projects and all. We also participated in that project. So that way, our plans are quite realistic. But of course, they are always based on certain forecasts and certain assumptions.
Right.
I hope
So,
I'm able to clarify.
yeah. So in the last quarter's con call, you were talking about this game changer project that you're working on, wherein you might be able to supply directly to the OEM. So has that materialized now?
Yeah, that is still, since we are bound by NDA, so it is taking a little more time. So we are on the track, but we are very much into it. And we'll share as and when the things are really materialized. Yeah.
Right. Secondly, sir, so now since we are looking at this large capex, so how are we looking to fund it? Because if you look at our balance sheet, it is already levered in terms of P&L, I'm saying, because the debt to EBITDA is about now 3.5 times. So are we looking at some kind of fundraise, equity raise?
Sir, I will tell you, first of all, our, since we are generating sufficient liquidity in terms of reserves and all, and, for any of CapEx, we are spending almost 25 to 30% from our own reserves. And one more thing is, if we are borrowing for additional funds, we are repaying also. So net borrowing to balance sheet doesn't go so high. So I don't feel that our numbers are really giving any alarm signal, because our debt equity ratio even now is because even banking norms say debt equity should be 1:1.5, or it can stretch up to 1:2 also. Our debt equity is even today, I think it is just little over 1. So we still have.
So actually, I was trying to ask from the perspective of P&L. So if I see last 3 years, I mean, there was a time when the interest cost was about 4% of our revenues. Now it has grown to like 5.5%. So, that way the P&L is getting pressured because of interest. Obviously, on the balance sheet, it's very healthy.
Not really, Ankushi. From what figure are you quoting this 5.5%?
It's the interest cost as a percentage of your revenue. If you see last few quarters, last couple of years, it was about 4%. So obviously, the debt has increased.
I will tell you I'll tell you biggest is in past 1 year, there is a lot of interest hardening also. It's not only RACL specific or India specific. Across the globe, interests have hardened. So that is also affected little bit. And secondly, finance cost doesn't has only the interest. Sometimes it has little bit foreign exchange fluctuations also.
Because we are paying to our foreign interests as well. So
yeah.
If there is any gain on the receivables, there is always adverse impact on the payable. So
Yeah.
that is reflected as the transaction interest cost. So it doesn't mean the interest cost is increasing, but it's just the representation of the.
Actually, our pure interest cost has increased by 0.5% or so, but that is basically because of hardening of interest. But I personally feel, and you also know it, it's always cyclic.
Yeah.
When it goes up, then it will go down also. And I personally feel this RBI, we are hoping that they will not raise, or they may be raising another 25-50 basis point. But people say maybe this is the last one. So you never know. But eventually we have to really flow with the wind. But eventually interest costs are not really going very.
Okay, thank you, Ankushi. I believe that would have been answered. If not, you can still.
I'll get back.
Thank you, Ankushi.
So maybe now if
now Miss Komal Lada.
Miss Komal Lada.
If you are there on the phone, Komal.
Sonalji, can you unmute Miss Komal if she is there?
Hello.
Yes, Miss Komal. Yeah.
Yeah, I just had few questions. The first one that the management
Can you
mentioned.
be a little loud, please? Sorry, your voice is not too great.
Yeah, sure. You mentioned
Yes,
that
good.
in Europe, 70% of the production is done in 4 months and the rest in the rest of the months. So do you not face any seasonality in your numbers?
We have been, again, we are a management which always has strategies. Since we are into many business models, many models of product, we are into off-road, we are into on-road. Lucky for us is when there is an off-road season, then on-road is off-season. When there is the on-road season, there is the off-road is a on-season. So we are able to balance out like this. I will explain, off-road vehicles which are basically used in summertime in Europe. On-road vehicles are actually being used normally across the year. So off-road vehicle, they always produce in winter time, and then in summertime they sell. So that's the reason in those 8 months we always have high demand. But there are particular model of racing and all, they produce in summer also. So we are able to balance out. And in India, we always have generally a very rationalized demands.
But
And
agriculture are also active.
yeah, and agriculture also works in a seasonal thing. So if we take seasons of all the customers, we are able to have a very good balancing. But historically, it happens our third quarter of the year is always very high. First quarter is normal, second is ramping up, fourth quarter is later ramping down, and variations between these quarters is not so big. We have been able to generally balance. And sometimes we use the lean time for producing components for the peak season. So sometimes we put them into our stores or in warehouses in our European countries where they peak demand, we really sell from those warehouses. So this is how we draw the balance. So I feel I have been able to answer. If you have any other question, or it's all clear.
Yeah, and the second one is that you are starting cash flow with PAT from 2018 and not with PBT. And why is tax being added instead of being subtracted?
You can.
Generally, actually, as per accounting standards, both are equally good. But your point is well taken. We'll definitely review it and change it to as you suggested. Because to be very honest, accounting standards both are okay, but PBT seems more logical. So we'll definitely implement it.
Because this is a suggestion coming from many people, so we understand that.
Yeah.
This year
We'll make this change.
Okay, thank you.
Thank you, Komalji. So now, Sonal, can you unmute Mr. Nirvana Laha?
I think he also had same question on cash flow. Mr. Laha, if you have any other question other than the cash flow, we could already answer it. We can unmute you. But if there's any other question, so can you unmute Mr. Laha, Sonal?
Pardon, sir?
Mr.
Can you unmute Mr. Nirvana Laha?
So he is not joined, I think.
Okay, in this case, then you can so Ms. Krishna Agarwal.
Okay, Mr. Nirvana is there actually. He's writing. So can you unmute Sonal him first? Sorry.
So Mr. Krishna Agarwal now.
No, actually, Mr. Nirvana is writing on the message. He's there. So can you unmute Mr. Nirvana? Mr. Nirvana Laha. He's there.
Yeah, he's raising his hand. Yeah, now he's unmute.
Hi, Prab, am I audible now?
Yes, yes. Hello,
Yeah,
Mr. Nirvana.
Hi, sir. Good evening. Sorry to take you into the world of accounting from the exciting world of technology. Prab, just a quick follow-up. So even changing that from PAT to PBT, I think in the current calculations that you're doing, the confusion is that if you start with PAT, maybe tax need not be added. So if you can clarify that maybe offline, if right now is not possible, I've already written to you. That will be useful.
Yeah, so if it is still not clear, we can connect one-to-one and I can explain you and we can connect together and I can answer you that. But as of now, what you're saying, we have also understood the anomaly. We will correct it in terms of PBT and PAT. And otherwise, if it's still unclear on the past, we can connect.
Sure, I'll connect with you, Prab. So my second question is now that, the trajectory to 500 crores remains fairly clear. Thanks to what you just shared. So I would like to understand for the next leg of growth for the company, say from 500 to 1000 crores or whatever you're planning. I would like to understand whether your current niche of, playing to the luxury segments, whether that is sufficient. You have enough runway there to double even from the 500 crore level, or do you think you need to get into other areas?
I will answer that in two parts. So when we say 500 crore, that is still to be achieved, but then there is a plan already there. So our first task is to achieve this 500 because as you know, our task was or our plan was to achieve it a year later, but we have pre-pulled it. It is not because that, it is happened because it showered on us, but there are plans why it happened. Beyond 500 crores is definitely the next milestone on which we are working. There are two aspects to it. One, the existing customers or existing businesses, these projects, whatever we have bagged, these are all in their initial infancy stages, in the sense that the volumes are still not what they've committed in the peak. So those projects will also ramp up by 26, 27. What those organic volumes from these existing projects are will be quite encouraging in this overall 500 plus journey. Apart from that, there are also other investigations what we are doing, because how the world will be 2030 onwards, it depends a lot on the e-mobility, on the hybrid technologies and other product segments which can be there. So we are evaluating many aspects. Also, we are evaluating aerospace and defense as a sector as well. If there are other civil aviation is picking up like anything, so we are evaluating that as well. So in the automotive side, this growth or this trajectory will grow on without much efforts, because we have established that niche. For example, if you talk about the two-wheeler motorcycles, so if it's a luxury motorcycle more than 350, 400, I think we are in 9 or maybe 8 of 10 motorcycles, we are doing the gearboxes or we are doing the parts. So that niche and luxury, there was one company sitting in our plant maybe a month back. They are a legacy British motorcycle manufacturer. So they just came to us because they didn't want to go anywhere else, because they know their customer is luxury oriented. So they want to have gears from us. So that's the kind of niche we come on. But yes, from 500 to 1,000, the organic growth will be there on these existing projects. And these existing projects, we are getting many new projects in the automotive side. I'm sure we will keep growing. But parallelly, we're investigating many other synergies or activities onto this e-mobility other than this core manufacturing. What we can look at, some inorganic growth or maybe other things and aspect. But as of now, very infancy. I don't want to give any what you call big stories, because honestly, we are beyond 500 also working towards carving out that strategy, because this 500 crore strategy was put up in 2019 and 2020 the COVID came in. So eventually we were also at that time a bit on the shaky ground, but we have achieved it. So similarly, right now we are spending a lot of time. We still have a couple of years, and then eventually how this 500 is 1,000, we will have a roadmap very soon, which is other than the automotive organic growth, what we are looking at.
Sure,
So just
thanks,
to add just to add what Prabha said, that okay, look, this 470, since we have already shared these numbers to our investors, obviously it is on a public domain. So it's obviously very clear that this 470 figure is already off desk of myself or Prabha. So eventually we are working now 500 next levels. Obviously, we still have complete 1 year with us to write all the things on a realistic basis. But yes, things are very much in the positive direction. Nothing really will take shape. So,
sure,
absolutely no add up.
Okay,
Yes.
thank you, Mr.
Thank
Lal.
you. Yeah.
Now we can unmute Sonal Mr. Krishna
Krishna
Agarwal, please.
Hello.
Yes, Mr. Agarwal.
Am I audible?
Yes, I'm here.
Yeah. Yeah. So, like you have explained quite a lot, and few of the questions are answered. Just generally, previously you used to guide that for the additional capex, you tend to enter the capex only after you receive orders. And
Yes.
and as you have guided, like for a 250 crore capex for 4 years, so do we have a pipeline of orders?
Okay.
And
So,
like, what's the benefit for the UP government?
yeah, I will tell you. I am Gurcharan Singh. I'll answer you.
Yeah.
First of all, on this question of UP government orders, UP government has already publicized a global investors in the Global Investor Summit, a subsidy scheme. So that scheme is already on the internet. If you want, I can send that scheme by email also. Otherwise, you can just download from the UP government's website.
Okay.
But in nutshell, it is, since we have allowed for, we have given this 250 crores of investments. This window is for a period of 4 years. and that window has started from 4th November 2022. So technically, it's not for us only; it's for the entire investors who have any plans to invest money in the state, on the plant and machinery, land or building or any such equipment which are required for the production. So once this four-year window is over, for next 12 years, basically 20% of this investment will be divided into 12 equal installments. Every year, there will be kind of subsidy given back to the investor.
Yes, sir.
Yeah, it's a cash subsidy. So technically, if I say if I have put 250 crores, so 20% 50 crores.
50
So
crore.
it means if I finish this investment in 2026 or 2026 November, so this 50 crore means from 2026 till 2038, around 4 crores per year, it will be cash subsidy. This is the kind of broad scheme is there. Of course, there are many covenants and all those things to this. But yes, this is a broad summary. But you can get all these details from the website. Everything is very crisp to all the investors.
Okay.
And what is your second question?
So generally, you tend to announce capex after receiving an order from the client.
Yes, that is absolutely clear. We have always said that we never invest any money until there is a clear order from the customer, except this new building, Shakti block, which we have shown today. Of course, this has little futuristic thing because we have kept almost 50% area free in this building for next expansion. So obviously you can't really create building like this. So that's the reason. Building investment we have done with the futuristic projections, but otherwise all equipment we order strictly only when there is a firm order or firm nomination from the customer. As Prabha has told many times, we have to invest money for producing even the first part. Okay, that production will start even after 1 year or 1.5 years. But many times we have to invest. But yes, we'll invest only when there is a firm order. Okay. So
Sir,
if there is no more
one
questions, so
more
then we can. Yeah.
Yeah. So one is so in a previous quarter also we got a good margins in if you see Q3 FY21. So that time we guided that because of prototyping we were receiving good margins. So does this quarter also include some prototyping uh, like orders
Maybe
that
if you can
we
answer it,
got?
yeah.
Yeah, Mr. Agarwal, don't see the company quarter to quarter because it is, if you are a long-term investor, the quarters should not be the basis of that. There are always some seasonalities, there are always some different, provisions in certain aspects. Overall, the margins for the year will be healthy, and we've always tried to maintain basis whatever business projections we have, and it will be healthy in future as well.
Oh, okay, yeah, thanks.
Okay, thank you, Mr. Agarwal.
Yeah, I think Mr. Sahil is the last question of the day. Mr. Sahil Sharma, Sonal, can you unmute Mr. Sahil Sharma?
Hi, sir. Can you hear me?
Yes.
Yeah. Yes, Sahil.
Sir, congratulations on great execution and very exciting plans, and thank you so much for sharing those with us. My first question is, sir, if we look at our ROE, which is return on equity, that is around 20 to 22% right now, and our current growth rate is around like 28 to 30%. Basically, we are growing faster than the return on our equity. What that means for us is either we have to keep increasing debt to grow, or we have to sort of dilute equity. And what you're saying is that the debt is comfortable right now, but what we want to understand is that what is the sort of threshold for comfortable debt to equity from like 1.3, like where would we be comfortable, would 2 be comfortable, would 3 be comfortable?
Sahil, I'll be very, very honest with you. Right now, raising equity is not on our mind because our debt figures are very, very healthy. And we really want to follow this norm only because I tell you, my thought process is debt is not bad until you have a firm line of business. That is only bad if you invest either on speculation or either on just creating certain technologies or certain capacities in anticipation. So then that is bad because you do some investments in anticipation and eventually those anticipations don't come true and then you are in problem. Our business model is, as I already explained in earlier question, that we never invest on anticipations. We invest only when there are firm projections. Now, our biggest asset or biggest advantage is all our customers are very big brands. So if they make projections, those projections are maybe with hundreds of years of their collective experience because their decision-taking process at the board level, people cumulative experience maybe 1,000 years. So those projections are very, very realistic, keeping the volatility in picture and all such stuff. So eventually, our risk perception is very, very low in terms of failure of those projections. And biggest thing is our customers are very, very professional and they are big brands. You know, if they know, yes, because of their wrong projections, this supplier has invested and is not able to use those investments, they are very kind and very professional to ensure that they compensate us in one form or another, whether it's the additional business or some alternate business or such stuff. So that way our model is perfectly fine. But yes, who knows tomorrow what happens, we can't say. But as on today, at least I'll say for next at least couple of years, we'll keep following this process.
Sorry, Rob, this slide, I had a question. You're saying current growth rate. What growth rate is this? The revenue growth you're talking about?
Yes, sir.
So if you compare this year, it won't be 20%, it will be around 40, 37, 36% in terms of sales growth. So, okay, ROE will be around this, but this year, if you see 278 and let's assume we're reaching 365, it's around 30, 35% of growth rate. And even next year when we reach 500 should be around 30, 32%. So that with an absolute number, there is always a difference between that. And second, I think this is a very common question from all of us. Eventually, in terms of the high debt and high debt applicability or the high gross revenue, but we have to also remember that there is an equivalent high amount of repayments also going to our bank. So the net addition is not that much. So, for example, this year the repayments. Yeah, around 30, 35 we repaid as well. So the net addition will not be that high as you see in the absolute. I mean, ratios, yes. From our side, they're still comfortable on the many aspects, on the interest coverage and other aspects. But otherwise, since we are always projecting a high and delivering a high sales growth, which is around 30, 35 and compounded annually, yes, it's around 25 to 30% margin in our industry. And so now I think next year will be around 500 crore. I do not think many gear manufacturers who are, let's say, doing what we are doing are our size. Maybe they are doing other aspects in terms of maybe selling motors or selling other products. But core gear manufacturer, I believe we would be now in top 3 of India in terms of sales. So that's why we have scaled up this business and we are still scaling up. So that is how we try to maintain these debt figures.
Yeah, thank you so much, sir. My second question.
Sorry, your voice
is cracking, Sahil.
Sonalji, is Sahil's signal bad or our signal bad? Can you hear us?
Sonal, can you hear us?
There is some problem in his side.
Okay. So maybe we can take some last question because it's already...
Maybe some last question for the audience. Because the registered are finished. So if there is any...
I think this Kaushal Kedia has raised his hand. Can you unmute Mr. Kaushal Kedia?
Sonal?
Hello.
Yes.
Yeah. Am I audible?
Yes.
Thank you for taking my question, sir. My first question is, what is your current order book? If you can give a range also, if you can give a range.
We actually don't understand this question.
This is the order book actually.
Can you explain?
You say for the year or for the entire next year, 10 years.
So if you can give us for the whatever the visibility is for the longest period, and then I just want to ask like, so actually it's fair enough that you've given us a visibility on the revenues for 23 24, which is around 470 crores. So I was just trying to gauge what could be the revenues post that.
Yeah, so order book, what companies usually release, I don't feel that that is fair, and that is kind of not our practice. Maybe people multiply the next 10 years and tell us this much business we have. We don't do that. We don't encourage it. What we can give you is the next 2 years projection. This year we've already what we have achieved. Next year is the guidance of 470, and organically in past, since we have already grown around 2025, so that should be a benchmark growth what we should consider, because growth rates should be similar. That is what we can give as a guidance or an idea, as an idea. But actual order books, we don't give that way. Then we don't feel that's really the correct way of portraying your
See,
business.
Kaushal, and frankly speaking, we don't really feel this order book is leading to any realistic benefits, because I think these normally private equity players and all, they always work on this order books and all those positions. Business actually should be planned on a year-to-year basis only, and rest all should be the forecast. So,
Okay, sir. Fair point. Sir. Fair point.
This doesn't have any relevance.
Okay,
Fair
now
point.
Yeah.
Can I ask you my next question? Hello. Hello.
Yeah, please go on.
Yeah. Since you're already working with Kubota, after Kubota acquired Escorts, they plan to be very aggressive on their manufacturing in India, and they plan to source a lot of their global sales to India. So are you seeing any improved traction on that front?
Sir, we are already supplying to Scott's Kubota India, so that way our relationship is already multiplied over there. And in fact, our numbers are increasing. But of course, one thing is very clear that if we were supplying to Kubota Japan, so there was a kind of exclusivity. So now if we are supplying to Scott's Kubota India, so obviously that exclusivity little bit dilutes, because now obviously Scott's had their own vendor base also. So obviously the vendor number of vendors will increase. But yes, since we have a legacy of 15 years of relationship with Kubota, so definitely we have a kind of upper edge. But yes, just to update you, we are already nominated for many, not nominated only, mass production has already started for many projects for Scott's Kubota India, and it is set to follow for future years also.
So my question was, since they are being so aggressive, are we seeing any improved business on that?
I told you, it should be, as I told you, on one side there are added business opportunities, but on the other side there are added competition also.
Competition also as well.
When we were supplying only to Kubota, Japan, so there was exclusive. We were the only gear supplier for at least first 5, 6, 10 years, 8 years. After that, there were 1 or 2 more added. But now, once the Scott's Kubota is there, of course, numbers are increasing, but number of competitions also are increasing. So that one has to really draw a balance. But yes, there is a increased opportunity. Why not? In fact, a very, very senior management team is visiting us for all such discussions, since our relations with them are very, very strong. So I will say, yes, we have to put our strong foot forward, but let's see. We have to fight the competition also. So let's be prepared.
Okay, fair. So, and one more question.
So, Mr. Kedia, you can send these questions. There are others also lined up, but we can definitely answer if something is. You can probably write in the chat window. I can answer immediately.
Actually, I was confused on the previous participant who asked a question. I didn't understand that he mentioned that we aren't supplying directly to some OEMs. So I didn't understand that point.
We are already supplying directly to OEM. So he was asking that.
What did you understand? OEM means original equipment manufacturer. So we don't supply to tier 2 and then they supply to OEM. We work directly with the end customer. For example, if I'm working with BMW, I work directly with BMW. I don't work with any intermediary. That's what it meant.
Okay, understood. Thank you, sir. Thank you very much, and thank you for the detailed presentation. Thank you.
No worries. Okay, now maybe last question, Mr. Sunil Kothari is wanting to ask a question. Can you unmute Mr. Sunil Kothari, Sonal?
Thanks for opportunity, sir. Really very detailed and useful information by this presentation. And hearty congratulations for such a good and major clients you are getting, the way you are preparing yourself. My question is, sir, externally you have proven yourself already to your customer by your product and qualities. Internally, how you are preparing your team for engineering development, your R&D, your HR policies, because it seems that you have long runway for growth. So if you can talk a little bit more on your internal preparation, and the related point is, where is the time you and Mr. Prob is giving more? Which are the area of concern or risk where you are careful about? These type of things, if you talk qualitatively, will be really helpful.
Because I'm good, Sharon. I will answer you. First of all, you said that we're having very good external customer base, how we are managing internally. So I will sum up this answer in one way. We already showed you we have been certified as a great place to work. So if there is a great place to work, it is a human resource which has helped this company to get this certification. End of the day, whether the engineering or the quality or the internal, for producing a good product or producing a good service delivery, you need good technology and you need good people to deliver that. So when you say good people, so you take care of the people, definitely they will deliver. In fact, when we said certified by great place to work, in fact, in one of my tweets also I wrote, okay, look, an employee works in the organization to earn money or to get his job, but a happy employee works not only to earn money, he works also to make the organization also a brand or to reckon with or to say. So end of the day, a happy employee is always an asset. And this is how we are creating a very, very strong human resource for which Prab and his team, because Prab really, you said also how you really, between you and Prab, how you manage. So really, Prab is spending most of time on human resource and all such activities and creating the right kind of work environment in the company. And this is how we are really being able to grow internally also. Because I tell you, if we are not able to grow internally, we cannot grow externally. That is a very, very clear thing. Because if getting the order is difficult, retaining the order is more difficult. But sustaining over a long period of time is really very, very difficult and very, very challenging. Until today, we are working for last 15, 20 years. None of our customer has left us. Okay, this really shows we are a company which is sustaining, and we cannot sustain until we grow internally. So definitely we have been able to do that. And I hope this was your question, or you wanted some more additional information.
Great, sir. Great, sir. What you said is my point. One more was on risk factor. Which are the risk factor which you are careful about and you take little more time on those?
Biggest are the global risks. So I tell you which way every day we keep listening all those global volatilities and all those things. Global VUCA is there, and those VUCA is always troubling not only RACL for all the industry. But if you say company specific risk factors, we are not really seeing any major risk factors. Yes, minor hitches and glitches here and there are always there. First of all, raw materials are always a volatile thing. So eventually this raw material volatility really keeps us in trouble. But otherwise, we are very, very comfortable in managing our human resource, managing our technologies. We are incidentally having a very big land mass, so we need not to really be being scared of that. But yes, raw material fluctuations are those, yes, foreign exchange fluctuations also really create a little bit of risk. But of course, the risks are hedged also. So that way, there are no such specific major risks, but general risk of raw material fluctuations basically are always a risk. Probably if you want to add anything to this, yeah.
Sir, sir, just last question on this. the way we have entrenched a global market and very prestigious and luxurious segment, we are making 800 parts. I'm sure there is a immense scope to increase number of parts also, and number of parts, same parts supplied to maybe same customer, different customer. The way we got this Europe car manufacturers, EV products and all. So what is the size of opportunity? Don't say any numbers, but if you qualitatively you can talk about what is the opportunity size, because we have very big giant customers. So if you can talk a little bit.
I don't know what you mean
What's the
by
size?
giant. We are working with all the big three car brands already in Europe. We are working with all the
Probably your
OEMs.
voice is very feeble.
My voice is far, or my voice is not clear.
It was not clear. Now it is clear, please.
Yeah, I'm saying when you say giant customers, I don't know what do you mean by giant, because from our side, we're already working with all the big brands, all the three big car manufacturers. We are indirectly working in Europe. Tractors manufacturer working with all the big brands. So that ways, we are already working with huge business orders. But I think what you want to ask is that whatever we have achieved as of now, we have achieved through a certain specific set of customers. Is there any more new customers which are lined up, which are directly or indirectly adding to this exponential growth? As of now, the existing customers, what we are adding, we are expecting business growth from them, new projects from same customers. And any new customer, we are always on the hunt. If you have any leads, you can share with us. We can definitely work on that.
Biggest is as of today, ZF has plans to source $2.5 billion. For us, even if we get 40-50 million out of that, it is sufficient for us. So, you know, all the big brands are already with us. So they are oceans. Only thing is how much we can dig out of it. But yes, if you can give more suggestions, we'll always welcome.
Okay, thank you, Mr. Kothari.
Thank you.
I think
Thank you
that
very
is
much,
it.
and wish you good luck, sir.
We've
Thank you.
already exceeded by.
Yeah, I think now we should.
Yes. So one final anybody left. Okay, so maybe we can wrap it up now.
Yes.
So what is the procedure?
Mr. Arif, you can just give a vote of thanks to all investors. Mr.
Ladies and gentlemen, thank you, ladies and gentlemen. We hope we are able to resolve all the queries. And if at all there are any queries that are left unanswered, you may send them to us by email at investors@raclgeartech.com, and we will try to get back to you and answer your queries. On behalf of RACL Geartech Limited, I conclude this conference call, and you may now disconnect your lines. Thank you. Thank you very much. Thank you, sir.
Thank you, gentlemen. Thank you, ladies. It was really very nice talking to all. Very nice meeting to all. And thank you once again. Thank you. Bye-bye.